Now, looking at the Kenyan markets, we've got the Kenyan market continuing under pressure. So the gains that we initially saw with the euphoria around that peaceful election in Kenya seems to be wearing off very rapidly indeed. So we've got that market today down 1%, 47.07 points, and closing at 4,727. We shall be digging into those numbers with Johnson Nderi very, very shortly to try to understand what's going on in that market. On the Kenyan currency front, we've got the Kenyan shilling also under pressure, I think earlier today indeed, and it continues to be under pressure, 0.3% down against the dollar, 85.96. Some people suggesting that perhaps the fact that finally Raila Odinga, the Prime Minister, has challenged the results of the election in court is giving people the jitters, and people are holding on to those long dollar positions. Now, joining us now from our studios in Nairobi to give us an update on what's going on there is Johnson Nderi Investment Analyst at Suntra Investment Bank. Johnson, I'm suggesting in my intro that we're seeing the market continuing to be under pressure, and in fact, by my calculation, we almost have eaten most of the gains that we saw with the initial euphoria around the peaceful election, and we're giving that back up, suggesting that part of the reason why the market is under pressure is because of the uncertainty around the conclusion of that election. What are you reading?
Yeah, we're probably seeing the same thing. Although when you think of when you look at the day's activities, shares like a share like equity needed to correct to edge back downwards as a result of going ex-dividend. But you know, it was a mixed session. You had some good gains in some counters, you got some drops in others. It just so happens that those in the 20 share index, by and large, we saw most of them dip as opposed to the rises. But if you look at the broader base NASI, it was slightly lower, perhaps because maybe it's a much lower number, but again, you just knocked off about less than a percentage point. I mean, less than 67 points, 0.67 points.
0.67 points,
which is okay for me.
Yeah, let's talk about this uncertainty, though, that is pervading the market, because we did know that there was going to be this challenge. The Prime Minister and his party signaled very early on that they were going to challenge the results because they were unhappy about certain aspects of the conduct of the elections. Why do you think the market continues to be under pressure, particularly given the very strong gains that we saw on the first 2 days after the vote?
I think what the market thought early on was that perhaps they thought it was a passing cloud, but after I think over the weekend, when everybody saw the points that raised, some would argue that there is merit in some of those points, and because of that, now this could go either way. We really don't know what the outcome is. We don't know what their competitors' position is. We don't know what IEBC's position is. So one could argue that there is a bit of merit in the Prime Minister's arguments. But just remains to be seen what the Supreme Court will come up with. And the difficult thing for investors is that if this could go either way. But we could go into a runoff, or it could go into, we could maintain status quo and to see the president-elect being officially inaugurated. Yeah,
we know that the Supreme Court has got 14 days during which to sort this out. So we will be waiting for the result of that. But in the meantime, initially, in the discussions that I had with some of the commentators on the channel about the economic positions of the leading protagonists, that is the Prime Minister's as well as the Finance Minister's parties, there didn't seem to be any difference in terms of economic policy. So perhaps whatever the outcome of this challenge, really in terms of economic policy going forward, there is unlikely to be anything that changes much.
Well, I'm not so sure about that, because in the Prime Minister's manifesto, you'll see position where they're talking about foreign currency controls, and nobody knows what that means for the economy. So from a business perspective, perhaps the Prime Minister's position will be a bit, investors will look at the Prime Minister's position a bit warily, because we've got a strong import-export component in our economy, and that could disrupt it quite a bit. So everybody is concerned with intervention in that market, and that could lead, direct intervention could lead to extreme volatility and who knows what else.
Yeah. So what's the outlook for the Kenyan market for you then? I mean, this drift that we have had since the end of the elections is certainly taking a toll on the market. Where do you see the market heading from here on?
Well, I think there's still some, if you look at the announcements that have come through, they have been quite positive. We've got some stocks that we think that are undervalued that should be trading high, especially in the insurance and private and the equity sectors. So we think there's some positive stories in the market today.
Yeah.
But over the medium to long term, we know the government has a challenge in financing. We don't know whether that means higher interest rates. That remains a risk going forward. So for me, I think that is what will in the medium to long term put some upward pressure. Maybe we might be testing 5,000 and maybe just maintain it over there. But I don't see much more upside going forward in the medium to long term, given the challenges the Kenyan economy faces going forward.
Absolutely. Also, if it remains unresolved, the position of the finance minister in relation to the ICC, I saw a story today suggesting that he is asking the International Criminal Court to drop the charges against him. And if that process were to continue, it means the cloud of uncertainty, if he were to emerge as the victor, would go on for an even longer period of time.
Yeah, that's the other concern. We don't know what really that means with regards to our relationship with foreigners, especially the West. But with the dropping of Muthaura's case, we think perhaps they might look at us with a bit more favorable eye and maybe come round to perhaps what other people are saying was right, that maybe there's no real case against the president-elect. So we again, that remains a gray area. It go either way.
Yeah.
It's still a cause for concern, perhaps, especially for those who maintain strong trade ties with Europeans.
Absolutely.
So, and Americans.
Yeah. Talk to me quickly. Sorry, Johnson, we're running out of time. Talk to me quickly about the Kenyan shilling. We saw it coming under pressure today after the Prime Minister filed that petition. Some people suggesting that perhaps that's the main reason why the shilling was under pressure. What's your reading of the currency going forward? Are we likely to hold on to the gains that we've had so far, or is that also likely to come under pressure in the next week or so?
Difficult to say, because everybody is tempted to hold the dollar at this point, given the uncertainty. But for me, I think the shilling's fundamentals look stronger than what they were in 2007. So I don't see an episode where we will have easing to the extent that we'll see the shilling sliding to 86, 87. So it suggests that the risk we are facing going forward is a political risk, and I think the risk for those who are holding the dollar, we understand that they may be having huge positions which they would not like to lose holding the shilling. So perhaps that is one would understand, but I don't think fundamentally. Even if you factor in political risk, that there is holding the dollar is necessarily a good thing.